Now, as we head into the overnight session and tomorrow, the main question is going to be whether the buying that we saw today can now result in any kind of follow through. The ideal situation here would be that buyers hold ES above this closing range breakout that happened late in the day. As you can see, like to get 06 quarter, you'd have to hold it beyond the RTH, at least cash close. Globex is open until 4 p.m. and so no problem holding it up until 4 p.m. Central Time. But as we go into tomorrow, I'm going to be watching to see overnight if the market is holding above 96 to 03 quarter. So, this swing low, 96 quarter, to the swing high, 03 quarter. Ideally, buyers hold ES above this area. Holding above this area would be a sign of strength, and it could lead to upside continuation. If we break 96 quarter, it doesn't mean that the market is now turning bearish. It would be a sign of perhaps a lack of strength, but it wouldn't be a sign of bearishness. Below 96 quarter, we can still have buyers step in at 82.75, the swing we talked about earlier, and the swing lows over here around 90.75. We have today's VPOC at 93.5, and again, that's a level where buyers can be active. And if the market is going to make a larger upside move, I really don't even want to see it coming back down anywhere near 82.75. I'd want to see it holding above the 45.85 high volume node, the first hour high, kind of all of this balancing that has happened. I want to see that hold, right? So we can use 96 quarter to 03 quarter as the aggressive area of support. We can use the 85 to 93 half as another more important area of support. And then I would put a level at 82.75 as a reference. And if you break down below 82.75 and below the 85 high volume node, then the bearish scenario could come back into play. Now, in order for it to come back into play, I still think that ES would have to take out the 59 to 69 area. So Friday's low and today's RTH low. So 59 to 70 is key support. And if you take out 59, well, then sellers are back in the driver's seat and the bearish scenario could still come into play. But so far, buyers have been quite resilient, and I think as long as we're holding above the 44.85 to 93 half zone, there would still be potential to head higher into the 45.25 high volume node and even the next area of resistance at 35.75 to 44.75. And we'll see in the overnight if this kind of late day breakout ends up holding. So that's going to be the view as we head into the overnight session. Let me see if there are any quick questions that we can cover, and then we will wrap up. Lauren is saying, is Friday's failed breakdown still in play, or is it complete since we have tested the top of the 2.5 day balance? Well, Friday we saw a breakdown attempt, which didn't succeed. Today we had the opportunity to break down, we failed to do so. So I think right now, as we head into overnight and tomorrow, this is why we're giving more edge to the buy side, is that so far, buyers have shown up and sellers have failed to maintain any kind of control. As I mentioned in the recap for Friday, I think today was the day. If we were going to head down, I think today was the day. They failed to push lower, even though, if we were going to go lower, I think this morning was kind of the ideal context for the market to go lower. Russell was breaking down. AD was near minus what 15 to 1700. Tick was completely below zero. Like if sellers were going to step in, I mean that was kind of the ideal context for them to step in, and they failed to do so. So I think at this point, as long as we don't see any big reversal and a break below the 85 high volume node, and below the 88 to 9091 consolidation from today, by default, the expectation would be higher prices. Again, no one knows what's going to happen, but based on what has happened so far and following the narrative, I wouldn't be expecting a sell-off. But all that being said, as day traders, we always have to be ready for pretty much anything at any time. You can have confidence in your ideas and in your analysis and still have enough humility to understand that the market can do anything at any time. You have to have both of those. You can't have just one or the other. You have to have confidence in your framework and your methodology, and at the same time, you have to accept that the market can do anything at any time, and that is why we use stops. Otherwise, we wouldn't, right? If we had 100% confidence and faith in just knowing what's going to happen based on the analysis, why use stops? Why risk 1% of your account? Why not 10%? Why not 20%? So just the fact that we use appropriate position sizing, that we follow a very well-defined risk management plan, and we always use stops, that in itself is the acceptance of the idea that anything can happen at any time, but we should also remind ourselves of that. It's already kind of deliberate in our actions, especially for anyone using Vulcan Trader. Like there is no way to put on a trade in Vulcan Trader without having a stop. Like it's just not possible. Every trade that you execute in Vulcan has an associated stop loss. That's the way the system is designed. It will not let you put on a trade without a stop. So that is because of the full acceptance that the market can do anything at any time. So you need both. So right now, based on the narrative in play, it seems like the market is kind of gearing up for a move up into 45.25. A break above 45.06 quarter 10 quarter could strengthen that idea and perhaps accelerate the market into 45.25. And then on the downside, we want to now see the market holding above 45.85 to 93.5. All that being said, if the market ends up selling off and breaking overnight, then guess what? Tomorrow, the trade plan's going to take that into account. I don't care what we said today. The analysis has to be updated, right? We have to do it based on what the market is telling us now. So that's my view on it. Joe is saying today was one of those days that if you missed the morning trade, the day was over. Yeah, I agree for the most part, yeah. I think if you missed that opening trade, yeah, what's left is not great. What's left afterwards, like even buying 89 quarter or, that area, I mean, it's not a fantastic trade. It's not like a trade you can't do without or a trade you can't miss. Yeah, I completely agree with you. I think that the morning trade was it. And many days that's the case. I think you can do really well just trading the first 2.5 to 3.5 hours of the day. I think that for any of you who are especially on the West Coast, I think it is very, very doable to trade just the first 3.5 hours. And for anyone who's working on becoming a trader, they're working on developing as a trader, you could maintain a full-time job on the West Coast and still trade the first 2.5, 3 hours a day. If you have a little bit of flexibility in your job, which, these days, if you're working from home or if you're kind of, more in the knowledge working space, a lot of people have, I think you could fully commit the first 2.5 to 3 hours of the regular trading hours session to the market, and then you could still go about and run a different business, go to a different job. I mean, both of those are doable, especially on the West Coast. Very easy to do on the West Coast. Market opens at 6:30 a.m. So I think the best opportunities are in the first 1 to 2 hours. Uh, and that's why I'm surprised. Like, sometimes I see online some traders talking about, oh, I don't take any trades in the first hour. And it's like, well, why? That's like the best time to take trades. Why would you not take trades in the first hour? And, it's basically people trying to trade for accuracy versus expectancy. They want to let the first hour range get developed so they have some sort of idea on bias on the day. And I get it. I get why they're doing it. It's just I don't agree with the reasons they're doing it. All right, guys, I think that covers all the questions that were posted here, and we are coming up to about 54 minutes here. So I know the live recaps have been pretty lengthy and extended. So I hope you guys are getting value out of them, and I hope that the people who are watching the recordings are able to sit through them because they are kind of long. But I think that this is necessary to make significant leaps in your trading. And right now, my focus is on helping traders make significant leaps, not baby steps. I think that over the next year or so, if I can help even a handful of traders, I know everyone's not going to make it. I mean, I think most people just don't have the most people don't put in the effort, let's face it. So that's okay. I'm not going to optimize my work for the hobbyist. I'm going to optimize it for the person who's actually trying to make a living at this, or at least trying to make this as a significant source of income for themselves and looking to make some changes. So those are the people I'm focused on. And, the hobbyists and the guys who are just kind of, getting into it with some sort of get rich quick mentality, or, with the mindset of, oh, maybe I can make millions with barely any effort. I mean, those guys are going to leave sooner or later anyway, so it doesn't really affect me. All right, guys, we're going to wrap it up here. Thank you for attending. And as always, we will reconnect bright and early tomorrow morning and be back at it again. Take care and enjoy the rest of your day.